Friday, June 27th, market analysis. Stan Ehrlich, good morning. Starting out with stock market indexes, go to futures, and I've got a few stocks I'm following currently. So we have overbought conditions in all of major indexes that I follow, except for the Russell, which is making minor new highs last few weeks. We'll take a look at it in a few minutes. But everything else on the daily data charts is above 75 or has been today, or still is right now, because we're pretty much high and last for the rally. So I turn my price bars in NinjaTrader yellow and in TradeStation when the RSI reaches 75 or higher, or 25 or lower for a cautionary reason. When you get that high on the RSI, you're usually going to top out within a short number of days, and it could be the same day, or and relatively close in price. Although price could go up or down more, and it may take a few days or even a week or more on rare occasions, you're still not advised to go long under these overbought conditions by me. So we're also up against technical resistance besides being overbought, which can happen anywhere. But now we're back up to the same price levels where the market topped out in November, December, January, February. Rather substantial resistance area. Now, if we get above that, close above that, especially on relatively high volume and a good size rally day, it could be super bullish. I don't expect that. I think too many things are adding up, and I've said so the last few days. And so far, market keeps climbing. But I've got to say the same thing because 53 years of doing this, I've seen it happen too damn much. And one of my jobs here is to keep you out of harm's way, which was a British battleship, I believe. No, German. Yeah. Harms was the battleship that got the rudder by a torpedo bent, and so all it could do was go in a circle and easy target. So the old saying is keep out of harm's way. That's all you had to do. Now, let's take a look at the 1 minute chart, a little history there. Coming down a little bit at the moment, but certainly this does not look much different than the last few times that we have had very short, few hours long, half a day, something like that, stumbling blocks. But nothing that's turned me into a avid bearish opinion. But this is how they start, but I can't claim that that's the case at the moment. SPY, overbought, has gaps to close. Other indexes also, like the QQQ, have gaps to close. Now, this is in new historic, all-time new high ground today for the first time. Very profound. It is pretty much high and last. A little delayed data here, though. All I have to have is some kind of a miserable failure, like closing lower today or especially below yesterday's lows, and I will be very bearish very quickly. But this is simply a warning. I would not go long here. I would wait for a little bit of a dip and see how that holds. If not, it might not hold, and you could start something particularly bearish. This is how bull traps develop. We're still strong, coming right off the highs. QQQ, gaps to close underneath the market, and maybe even a small one this morning, although it's too small for me to see on this chart. But also new historic highs. So I'm going back to the beginning of the year here. So you're looking at November, December, January, February. Those are the previous tops. And now for the second day, we are above all previous highs all day long so far, but overbought. So be careful here. What about the QQQ 1 minute chart? Minor little resistance. Could very well stop at a little bit of support, a dip lower, 5448.20. Even a little lower. As long as it stays higher on the day than yesterday's close, and closing reasonably strong or more, there's no reason to not expect another strong day, except I keep harping on this overbought conditions. I've seen markets get overbought, not look bad, gap down, creating an island top and crash right away. Next, overbought for the second day on the NASDAQ futures and in almost, not quite new historic high ground, super close. Right up against where it got overbought before, not quite on that high. Now we're overbought again, same prices. Could end up being a broad double or triple top. Next chart, NASDAQ futures. They all look similar, of course. YM, first day, today, overbought. It has cleared some resistance, but that's not the most profound. That, again, is at the highs that we saw back in November and in February. In February, we had a bearish engulfing ER sell signal on the exact high day and a bullish one almost on the exact low day back in April. Looks almost identical to what happened back in August of 24. History repeats itself, and this is why technical analysis is valuable, especially if you practice it a lot. Next, YM 1 minute chart, just very strong. Got to have a big correction here, and I won't be surprised if it doesn't happen all of a sudden. New news, unexpected results from fundamental information, a whole variety of things could happen. Russell, up against historical resistance, is very, very profound for multiple years. Not overbought, but the resistance level is not to be ignored. And the 1 minute chart for the Russell. Well, let's look at the bonds. They're doing fine. They're up against a little resistance. They're not that close to overbought, and it is almost another new high. This is agreeing with what I was talking about, and we did get a couple of buy signals around where it bottomed out, not on the lowest lows, unfortunately, like that one that happened on January 14th, like that one, super profound on October 23 of 23. And anytime you see red or green, it's a bullish or bearish ER signal. I'm not showing you the exact trades. There are actually a total of 4 possible. ER1 scalp I like the most because it is doing outstanding almost every week. New high equity for 2.5 years. Only one losing month. Someday I'll show you the track record, or maybe you want to ask for it. Next, 10-year notes. Overbought, a little bit above resistance and staying there so far. If it goes sideways, you can eliminate the overbought condition that way and then go up even more. Not what you would normally get. Normally, we'd see this market pull back into the trading range support area that's now just below it, immediately below it, and even a little bit lower. But I, generally speaking, like what I see. The last couple of months have been trending its way up. Remember, in bonds and in notes, I'm looking at the potential of a very broad, very large double bottom formation. It would be October of 23 and January of 25. Next, energies. All 3 of the major energies I track have bearish engulfing sell signals and doing just great. On Monday the 26th of this week, bearish engulfing, huge, dropped like crazy the next day. And it's just simply going sideways for the last 3 days, Wednesday, Thursday, today so far. Now, I'd love to get a bearish engulfing. I would get another bearish engulfing sell signal if that happened. Because the overbought condition last time it happened on June 23 was is within the number of days I allow to look back in time to see if it was overbought recently. And if the answer is yes, which this is, we will have another red bearish engulfing if it gets below yesterday's lows. And that implies it's going to drop more right away. We had a bearish engulfing last Friday in natural gas, which almost made another new low. It's been making new lows ever since last Friday, on Monday and Tuesday and Wednesday and Thursday, and today finally it's bouncing. Now here's the problem. Looks like the downside breakout on this complex head and shoulder top was on Wednesday, with a little bit of a follow through on Thursday yesterday. But I talked about breakouts are usually heavy volume, large trading ranges, exciting type of price action. I can't say that's true on Wednesday or Thursday. Today, another problem. We are back up above, trading above, and staying at the moment above the neckline. That is a relatively significant no-no. If we close where we are now or above the neckline, that is basically going to start me to think that this is not a head and shoulder top. And I'll have to erase my markings for the shoulders, etc. The timing on this was outstanding so far. Well, that's that. We can't change that. There's only 1 day difference from the highest high to the first shoulder high, and that was November 22nd of last year up to March 10th of this year. You take that number of days and you look to the future, and you miss by only 1 single day. The last high was June 20th. I think it was a day early. It really doesn't matter a day later or a day early. It's so close. It's ridiculously accurate. Only a few percentage of head and shoulder tops and bottoms using daily data are this accurate timing-wise. Within 5 or 10% accuracy would be just dandy. Not within like 1% accuracy, and that's approximately what we've got here. But I'm disappointed the market didn't stop at the neckline. It's above it, and I may have to abandon the head and shoulder concept because of that. We'll see tomorrow. Oh, that's Saturday. Next Monday. Excuse me. Don't forget, next week is a 4-day week. Huge bearish engulfing and heating oil. Now that's the third energy. And today again, we have another bearish engulfing, and it is a red ER sell signal because it was overbought within the allotted number of look-back days. And bingo, 2 of them now. The implication is it's going to go down to new lows quickly, substantially. Pardon me, sorry about that cough. Substantially, and I'm frankly expecting it to get back down into this area here below 2.02 and very possibly 1.88, and maybe even a little lower than that. We've got gold now for the first time in weeks, months, oversold. And we're approaching a horizontal support line, which I've been pointing out for weeks now. So I do think it's about to bounce off this support line. This line is a bearish resistance line across a few tops and proven to be pretty good when it came down from above, touched it, and turned right back to new highs again. So maybe we'll bottom out in another couple, 3 days between that support horizontal line and the previous bear trend line, which is now a bearish support line. We'll see what happens. I think that's an interesting possibility for a bounce. Do we have a head and shoulder top here in silver? If we do, the neckline slants downward a little lower, a little bit more of an angle than I would like. The timing is almost perfect. It's only 1 exact day off of being tomorrow, which would have been the exact day I would like for the last shoulder high. But it looks like it may be a day early. I think the pattern looks pretty good. Let's see if this thing works. We might, too early to say, I don't like it completely. A head and shoulder top in silver. What about platinum? Well. Platinum has a brand new bearish engulfing ER sell signal today. This should drop a lot and very quickly. I wouldn't be surprised to see in the next several days it coming down to 1160, 1150. That wouldn't surprise me at all. 1351 and fraction at the moment. All we have to do is close lower than yesterday's close, and we'll still keep this red bearish engulfing ER sell signal. The lower it goes at this point, the better I like it. Next, copper. Gapped up and is now overbought, but is twiddling around the previous highs, which were back in June 5th. So if you make new highs for a trend up and you don't close above the previous highs, that is not necessarily a good idea. But we also have a gap to close below the market, so that's another reason to believe it'll come back to 5.0000. Looks like exactly maybe. Okay, 5.0005, big deal. And close that small gap that occurred this morning when it jumped higher. Or we're going to pop up a lot more for another couple of days. Not sure. Depends upon the close today. I'm going to vote back down again, some, but not a lot. Bull markets get overbought periodically and have minor downside retracements. What do we have here? Soybeans have a bullish engulfing today. Yay! I told you when it gets oversold, it only lasted 2 days. You were should be very careful about reversals. And here we have it. Is it going to work? Why not? All we have to do is get a little higher than today's highs, which bumped up against some resistance. Close, let's say above 1030.50. Call it 1031 or higher, and you'll be overcoming some resistance levels that it's already testing, and it's only like a little after midday. I like what I see. Even if it pulls back a little bit in the next couple of days, I'm still going to talk about pushing higher. It could go right back up to where it was only about a week or so ago at 1075. Do we have anything bullish happening in soybean oil? Well, yeah, sort of. Slightly, well, about unchanged right now. Market came down, closed some of a gap a couple of weeks, week and a half or so ago. Didn't finish the job. Usually gaps are completely closed, but occasionally partially. I'm liking the looks of that, but it's not very spectacular. There is that small gap above the market that it's got to close also, but that's just a little tiny bit higher, only up another, dollar. It looks like 53 cents per pound. So we're a little bit between a rock and a hard spot here. Next, we're getting more oversold, and this is an ultra oversold territory. We got down in the last day or two to below 8. This means that we're supposed to, usually do, not guaranteed, turn back up really soon. Sounds like an option trade. And dramatically. I think it could be starting today. So far, there's nothing dramatic. Minor new lows. Around unchanged at the moment, up 6 ticks. I would love to see it rally above yesterday's high. We'd have a green bullish engulfing. But I think it could be turning here. This looks like it might be the beginning of something. What about corn? Yeah, it got oversold also. It got down below important previous lows in August of last year, stayed there, closed there, went down a little bit more yesterday. In fairly substantial oversold condition, hovering around 18, 19, and bouncing. So this is not quite as dramatic. It's come up to some resistance. Yep, I didn't want to move the line completely. I wanted to drag it to the right some, and there we go. Okay. I think it's got room to rally up to probably 22.75. Next chart is wheat, another grain, up on the day, 5 cents at the moment. It's a doji, so it's indecisive, but trying to bottom out around some support. And I will put a little horizontal line in here off of this ER signal low and across the same price range. And you see that the market kind of came close, touched it, rallied to new highs. We're now in the same ballpark and trying to turn up. We might be turning up here. There's a variety of bullish things in the grains today. But we don't have that in Shell. We have a little resistance above the market, stopped the rally, today's highs, turning back down, so we're still only 12 cents higher, no big deal, $71 stock. I don't know. Support held on the break, closed the gap. 2 bearish engulfings at the top. I'm going to wait to comment about Shell. Apple. Our bear trend line is still active. It made it above yesterday's high, but not a new high for the move up. It's a little bit above the trend line, but we're currently trading at the line almost exactly. So this could be a breakout if it closes strong. On the other hand, closing a little lower than where we are could easily allow it to come back down again to 193.60. Or we're probably going to go right back up to 214. Depends upon the close today. What about Tesla? A little lower, no big deal. Some resistance stopped the rally. Some support has caused it to hold a week or two ago. It's slightly lower. I'm afraid I have to say kind of between a rock and a hard spot also here. Now, obviously, the trend has been up since March, April, May. The trend is your friend. So in general, and that allows for a little bit more of a dip here. In general, I would expect to see new highs for the trend in the next, couple months or something. And lastly, the new one is NVIDIA. Another new historic high, third day now overbought, and getting pretty damn high on the scale at 85. Usually when the market gets up here, and it did back in the middle of May, you top out. It didn't go down very much, despite the bearish engulfing on top of that, which worked a little bit, not much. Maybe we'll see the same thing again. Very strong bull trend. Bull trends get overbought, settle back a little, get overbought, settle back a little bit, get overbought, settle back a little bit. Maybe the same thing's going to happen again. Remember, we got a couple of gaps to close back down around support. And lastly, the E-mini. Dipping a little bit. I really have to have a move all the way down below 6201, 75-ish, to start screaming bloody murder. You have a great day, and, of course, profitable trading to you.